Hello and welcome to the live trading hour brought to you by the Live Trade Room, where we look for high probability trading opportunities across some of the world's largest markets. So we don't just trade foreign exchange, we look across multi-asset class, so we look at gold and oil. We also look for opportunities in global indices, largely because we want to see where capital is moving to. Sometimes that's really easy to identify. Other markets, like now, we're seeing stock markets at all-time highs, but we're also seeing some capital flooding into your safe havens like the yen and the dollar. So, we're obviously trading in very kind of unusual times right now. So we've got to take that into consideration when we trade these financial markets. So without further ado, if we could start then, we're currently in a few dollar trades and some yen trades as well. So we'll have a look at those in some details. We'll review last night's trade plan and we'll see where the opportunities lie as we approach the US Open now in a few minutes. Please take a brief moment to familiarize yourself with our risk warning currently up on the screen. Of course, if you've got any questions about trading the financial markets, we'll be happy to help you. Just contact, just go to a website initially, perhaps thelivetraderoom.com on the bottom left-hand corner of your screen. And you can also contact us through our chat function as well. So if you do have any questions, feel free to get in touch with us and we'll be happy to talk you through things. Okay, so let's, as we always do, we want to start with a review of market moving news. So we really want to see, before we start making any trading decisions, we want to see, is there any major news event that's likely to impact us significantly? For example, if we're approach, like on Friday, for example, we've got non-farm payroll numbers. So we've got US jobs numbers due out, and you don't want to be getting into a dollar trade probably 15 minutes before that major event. Those are errors that you can cut out very, very easily. Do a little bit of analysis, just make sure that you know what's coming down the line. So this afternoon, it's a bank holiday in Italy, by the way, but this afternoon we've got Christine Lagarde due to speak at the Brussels Economic Forum. I don't think there is Q&A with this session, so probably nothing outside of the normal sort of stance from these central banks at the moment, which is like the ECB and the Fed, which is really being lower for longer, being quite supportive, not too concerned about this inflation story, bond yields under control. All of these sorts of things is perpetually what these central banks are sort of standing behind, and that's in the midst of, I suppose, the largest quantitative easing program in human history. So that's the context for these markets at the moment, and as a result, we're seeing sort of this growth aspect filter through these markets. So we are seeing the indices markets push higher. But like I said, and I'll show you what I'm talking about in a second, we're also seeing some capital flooding into your safe havens, which is a bit is counterintuitive. There's no other way to call it. These markets don't need to make sense to be tradable, but we generally want to see and understand the correlations, and they generally give us the better quality moves. But nonetheless, we're certainly in some of those flight to safety trades. We're not in the indice buy trades, which again are fraught with danger, but are proving really, really decent trades. We've preferred to choose some of the foreign exchange markets to focus on with these recent moves. So without further ado, we've also got CB customer confidence. So of course, if an economy is confident, if consumers are confident about the economics, about the state of affairs, and we've got this situation obviously in the US with the program for vaccine rollouts is performing really well. We've got companies and economies opening up all across the US. So it is lending itself to sort of an increased confidence figure. So I suppose the reason why it's a medium impact news event is largely because you don't generally see massive variations in these numbers. So as a result, we can expect a sort of a medium news event, but we would expect consumer confidence in the US to actually be really quite positive. So that's just a little bit of a breakdown of some of the news, just for you to be mindful. of, and we've got the 10-year note as well. So just keeping track and just keeping an eye on these sort of longer term bond yields, which is a really good indicator for the concern that inflation is likely to pose. Very, very subdued. This is the context which is quite supportive for stock markets. You can see yesterday we had a bit of a rally to the upside, a bit of a flattening off, and then we've seen this 10-year bond yield just tuck back below the 150 level yet again. So the central banks are doing a fantastic job at talking to these markets and keeping things under control in the midst of what we can all see and experience as actually an inflation-based environment. So they're just saying it's transitory, and I think it's fair to say that the markets are broadly accepting that at this point in time. So I suppose what's causing a few difficulties depending on your jurisdiction is, I suppose, the potential reopening of economies. It's kind of fraught with danger at the moment with the Delta variant and restrictions regarding travel and how people are able to go about and enjoy their summer holidays. It's kind of fraught with complexity really at the moment, and there's a few unknowns thrown into the mix. So with all this in mind, we're entering summer market conditions as well. So it's going to be an interesting few weeks ahead, no doubt. But we can obviously only trade kind of the opportunities as we see them. So let's go into the charts then, and we'll see what opportunities we have for you today. So in our trade plan yesterday evening, we were talking an awful lot about the potential for some further dollar strength, largely against the euro, the pound, the New Zealand and the Aussie, and that's exactly what you can see currently up on screen. So really good, decent, high probability sell trades in those markets. We're also currently we're in the pound dollar to the downside, so a really strong move lower for the pound dollar. The pound yen as well, really decent quality trade. So hopefully we'll get certainly a little bit more downside in this market. That would be the expectation as we close out the month. So we do want to consider that I think tomorrow is the last trading day of the month. Yeah, of course it is. Yeah. So tomorrow is Wednesday the 30th. So we do want to bear that in mind, because what we are likely to experience is a bit of reconciliation. So those financial institutions will look to wrap up their quarterly figures, and as a result you can see often a little bit of profit taking often kick in. So just looking at a few of these markets off screen as well. So we are very much hitting, we're seeing these markets continue to the downside. So again, it's just following on really from yesterday's opportunities. So we spoke about these markets pushing lower, and we've had to be quite patient in actually waiting for that to be the case. So let me just see. Yeah, so let's go into each of these markets. Oh, sorry, there's one more thing to just draw your attention to. The S&P 500. We've technically made new all-time highs again today. So, and this is what we mean about the flow of capital. Normally we'd like to understand where the money is going to. But the problem with these markets at the moment, in our opinion, is that we're seeing markets go into riskier asset classes and also safer asset classes at the same time. So, you see, normally we'd expect if these markets if the dollar and the yen is strengthening, we'd expect a bit of pressure on the stock market, but we're not seeing that. We're making new all-time highs, even though these markets are all, moving to the downside. So this is the commitment of others that we talk about quite often. Where is the capital going to, and how can we identify those opportunities that that are likely to generate the greatest return. And the S&P obviously making an all-time high today. You know, we're certainly not in weakness territory by any stretch. We're just a few points away from all-time highs. We're probably 4, maybe 5 points away from all-time highs, which is, in a market of this size, yeah, the high is the 42.92, and we're currently 42.87. So we're talking about 5 points away from the all-time high. So there can be no suggestion that we're not in anything else apart from risk-on market conditions. However, the dollar and the yen are giving us mixed information. So what we're trading is the dollar and the yen. We're not really getting into this little uptick. We're much more comfortable trading the foreign exchange markets right now. So as a result, we can look at these 5 markets. So I'll tell you what we'll do. We'll bring the S&P just down here just to keep an eye on this market, and I want to just give the New Zealand and the Aussie dollar just their own little bit of space here right now, because they're the markets that are of interest to us. So let's get in. We'll do our analysis at this point in time. We'll see if we'll see how we can sort of engineer an opportunity. You can see, broadly speaking, we've spent quite some time drifting sideways in this market. Let me just change the color. So broadly speaking, we've spent the vast majority of the time just trading in a fairly tight zone, from say 1950 to 1920, let's say. You know, that's been the majority of the price action since the 22nd of June. We're now at the 29th, and we're just beginning to see this bit of price action yesterday. Those of you that were involved in this sideways moving pattern, you'll know yesterday we saw a bit of a breakout and a strong pullback before we're actually seeing this little continuation trade to the downside. So it's a little bit more about patience and kind of timing. So that's what this market has been about. We're likely to get, you know, another bit of a pullback. So if we can get a bit of a pullback to the 1900 level, then that would be certainly an interesting point in which to get into this market. It is quite, apart from the last sort of 15 minutes or so, it's been slow and meandering. Now we're getting that little flush trade to the downside. So there's an appetite for some dollar strength. It appears at this point. Okay, so so a pullback to the 1900 would be a decent opportunity for us. So what I'll do is, if I can just amend this opportunity. Okay, so we're looking for a high probability pullback trade. So we like to identify each trade so you can see what we're trading and why we're trading it. So it'd be a pullback. Yeah, it would be a momentum sell trade. So the overall prevailing trend more recently is very much to the downside. So we are looking for a high probability HP, high probability pullback, momentum sell trade, and the level at which we're looking to sell it is the 11900. So so that's our trade plan. We can be a little bit patient on this little flush down and look to get in on the pullback, and you will ordinarily always get opportunities on the pullback, so it's not something we need to be too anxious with. So let the market do what it has to do. We'll get the flush back, and if prices pull back to 11900, then we can look to sell it. And this is the thing. This is what defines, I suppose, some traders more so than others, is that we very rarely will go chasing markets. So we want the markets to perform as per our expectation, not the other way around. So yes, there's an opportunity to sell it. Could we sell it? Yes, we could. Could we get, we'd be getting into it 10 pips lower than we would like, but that's always likely to impact your profit on the other side. So allow it to pull back, and then we look to take that trade lower. The details there at the bottom of the screen. A little bit of a more recent uptick in volatility in these markets. Not so much in the S&P. It's going the other way, as you can see, to the downside. But certainly in the euro dollar, there is a gentle kind of uptick. We are looking at it, of course, on a 15-minute time frame. So that's our plan for. So we've had a decent flush to the downside for the pound dollar. We've got the monthly low, which is down at these levels. So this is potentially a strong level of support. So we just want to bear that in mind if we look to get into this trade. So we were selling from up at these highs, and we were able to sort of eventually get this rollover trade. We had to be really quite patient with it. So it's not been ideal. You look for previous lows on the way back. So we're looking at the 38 sort of 60 level, really. 38.60. Or we could go with the 38.57. I think is technically just a better level to work with. So again, this is a high probability pullback trade, and it's only because we've had the flush trade to the downside. So we're looking to wait for the pullback now. Sell trade below 38.57. Okay, very, very, very close to sort of previous major levels of resistance, so we can but our bias is still to the downside unless something significant changes. If the S&P sells off, then that would further reinforce further downside pressure in these markets. Okay, so the Aussie dollar, New Zealand dollar, they're all in the same position. They've got strong levels of support down at these lows. The pound yen is in a similar fashion. Very slight, more recent uptick in volatility in these markets, so that's good. Let's go into this on smaller time frames. Yeah, again, we're in this kind of pullback territory now. So we've been flushing lower over the last, over the European session, really. It's been a consistent push to the downside. So if you look at this on an hourly time frame, You know, what you want is a corrective move. So again, you're looking at previous lows. So in between the 75.50 level would be a decent pullback trade. So again, these are going from breakout trades to pullback trades. They're pullback sell trades below the 75.50. Okay, instead of these belows, I'm just going to do, because they're pullback trades, we want to sort of try to get in around those levels. So we can judge them accordingly. So the last dollar pair is the New Zealand. Just so that they're all on 15-minute time frames. I'll tell you what we'll do as well. We just mark these lows because it's always interesting to see what price we're seeing a low. So we're seeing, in this case, we're seeing like a 35 pip pullback, which is kind of very reasonable. The euro dollar is still flushing to the downside. So we've got these previous lows kind of up at these higher levels. Okay, apologies for that. So really the New Zealand dollar now is, we're still looking at just looking for kind of pullback opportunities really in these dollar pairs. So we'd be looking at, again, like the other dollar pairs, we'll be sort of waiting for a bit of a pullback opportunity. So it's a pullback sell trade, and it would have to be around that sort of 70.19 level. 70.19 level. So it's really getting prices to just correct, and then look to get involved in the next leg to the downside. So the pound yen is an interesting one because the yen's been marginally stronger than the dollar, so we've seen a nice move to the downside in this market as well. So you know, we keep getting these little flush trades from but inside those zones there's a lot of consolidation before you do get that next leg to the downside. So we are sometimes just looking at slightly bigger time frames can kind of help you. Yeah, we'd be looking for a pullback around the 153.33 level, sort of a 30 pip pullback, which would be very reasonable. So we just keep flushing lower or grinding lower perhaps. So around 153.33. So because this is a selling opportunity, we'll just change it to red for you. And so these are our trading opportunities as we see them. It looks like we're just getting this little continuation with this flush trade to the downside. So we are looking at the euro dollar to the downside, the Aussie dollar to the downside, the New Zealand dollar to the downside, the pound dollar to the downside, and also the pound yen to the downside as well. And again, this is the slightly counterintuitive aspect to these markets, is we've got the S&P at all-time highs yet again. So bit strange. Okay, good evening, guys. Chris, I hope you're keeping well. I'm sure you can hear me, can't you? Okay. Yeah, let me double check. Yeah, all good. So, hi, Chris. What's your bias? Yeah, on the dollar CAD. Well, straight away, it's the dollar CAD to the upside. We're in that trade on the bigger time frames. So really, the move is very much dollar strength and yen strength as well, and they seem to be playing out across. So. If we look at the pound yen, so the dollar's finding a little bit of strength even against the yen, but you know the dollar, it's the dollar trade, that's where the capital is moving to. So we're looking for dollar strength against the dollar Swiss, also against the dollar CAD, and this is like what we can categorically say. And we were talking an awful lot about this price action in this sideways zone, and that is your consolidation. We wouldn't be trading too much inside this little zone. The downside of that, of course, is you're having to wait between the 7th of May and the 16th of June. So occasionally we're having to drift sideways for long periods. So for 5 weeks, you could be watching this market doing nothing. But then you get the breakout, and all trends start from breakouts. So then we get the first move, and then we get the pullback move. And now we're looking to see if we get the start of a bit of an uptrend in the dollar CAD. Now, all the fundamentals and the sentiment needs to fall into place, of course, but the first target really would be the 125.00 level for the dollar CAD. And if you break above that, then there is your breakout trade to the upside. It'll be a very significant structural failure trade to the upside. So this is how we're looking at it. To answer your question, we'd be looking for this market to continue higher. I'm not too sure where this level has come from, the 23.84, but that's our thinking just from a purely just a price action perspective. Okay, loosely kind of corresponds with these lows, or certainly the close and the highs. So very much to the upside. What we'd be looking to do is there may or may not be further trades today in the dollar CAD, but a break above the 32. Let me see, the 123.86, sorry, is the recent high. You know, we can expect further upside. Equally tomorrow, if very little happens in these markets between now and tomorrow, then you can get in terms of breaking the daily high, and we'd certainly be expecting markets to trade up to these highs up here. So there's still a decent buy trade in that. Now we'd be looking at it for probably slightly different reasons to you. I've noticed you have your 100. Yeah, it's the daily's hitting the 100 EMA. See, we use simple EMAs. There's nothing wrong with EMAs. They're just a little bit closer to price, really. So this is a 50 period down at these lows. So let's put a 100 period moving average in, and we'll see where that lies. So in fact, let's put the 200 period in. I'm not sure where that is either in this market. Okay, much higher, and we'll insert one more. We'll go with a blue, a dark blue, and we'll put the 100 period. So the moving average method is just simple or exponential or smooth or linear weighted. So they're all different variations. We broadly use, especially on the daily, on the bigger time frames like the daily, the 100 period moving average, the simple moving average is, so that's up at a much higher level. Oh, sorry, this is a weekly time frame. So yeah, so look, we can arrive at the same opinion. We're kind of running into resistance. You see, we're trend traders, so Chris, we're only looking to buy this market, but the simple solution for us is looking to buy this market actually above the 100 period moving average, so it becomes resistance if prices pull back. So that's what we'd be looking for. So I completely agree. It's a decent level of resistance up at here. There is lots of traders will be looking to sell that price action. We're actually looking at the bigger trend, which is to the upside. You know, the buyers are still in control of this market. We go through a strong period of consolidation before we get that little move to the upside. But you're quite right. For us, our buy is going to be probably slightly above this level. If you wanted us to make a decision on it, it wouldn't be above the daily high like I just suggested. So for the sake of about 10 pips, it would be above the 123, the 12400 level. So let's see what the exact 100 period moving average is. So it's the 123.92. So the 12400 is a viable buying opportunity in this market. You've got probably 80 pip gain in this market, and you'd have strong support in and around that 12400 level. So that's how we look at it. I hope that's useful there, Chris. Good afternoon, Finbar. You missed the meeting, you had to go for your second vaccine. Okay, good stuff. We've still only received our first vaccine so far, so hopefully we'll be joining you now pretty soon. It's good to just to get it done, really, I guess. Yeah, do we ever use EMAs? Not really, because with any indicator, all we use indicators for is to reaffirm a particular bias or a position, or to reaffirm resistance or support and resistance. We'll only use indicators to reinforce our opinion. Now, we wouldn't trade using indicators, so we don't make decisions off moving averages. We don't make decisions off Fibonacci retracements. We don't, but they can play a role in reinforcing our view. So, for example, we go through this process purely technical, where we see prices, we see the commitment of others pushing prices higher. It creates a bit of a high. So we know that the buyers are now in control of this market. So we, as a result, are looking for buying opportunities, and we look at the pullback and we think, right, when is the best point to get in? And what we like to see is strong consolidation. And then when we get the breakout, it's kind of a bit of a no-brainer trade. Now, we had decisions to make. Like, we weren't going to get into all the dollar pairs, but we did want to get into some of them. Pound dollar, euro dollar, Aussie dollar, New Zealand dollar were sort of our focus for that reason. So no, we don't use EMAs. We do use SMAs, simple moving averages, but we largely use them on the daily time frame. They're far more important on the daily time frame than they are on the smaller time frames. Yeah, I mean, primarily we use support resistance where we look at price behavior. We want to see how price is behaving. So we're price action traders, and we use support resistance to kind of guide us in and out. So especially something like this, which is the breakout trade, it's the trend trade, and then you get the inevitable pullback, and then you're waiting to just time your entry again to the upside. Yeah, listen, no problem. That's exactly what this session's all about. Do we know what institutions use by chance? Yeah, they use the 200 period moving average, simple moving average. They use the 100 period and the 50 period, which are exactly the same moving averages that we use. So when you hear, you might hear in Bloomberg or any of the media channels, prices are trading above or below, 200 moving average. What they're generally talking about is the daily 200 period moving average. So it's taking the average over 200 days, and it's giving the markets a bit of a stable figure to work with. So that's the answer to your question. They're SMAs. This is where your financial institutions will always try to be on the right side of those moving averages, although those are not the reasons perhaps why they get into those trades. It might be the reasons why they get out of them a little bit more. If they get in at these lows and price runs up to the 100 period, 200 period moving average, they might look to get out around this kind of price. Same around the 100 period. You can see we've broken through that previously and we've pulled back towards it, and now we're back at that level. So I hope that helps. But what's important is the most important moving averages on the market are on the daily time frame. Those are what mean the most. Now, loads of traders use moving averages, again, to reinforce their positions. Nothing wrong with that. And if you can find a consistent edge to doing that, then you are good to go. And we do use them from time to time just to reinforce. So we'll often be looking at a particular price, and someone will say, it's also a 20 period moving average or a 50 period moving. Yeah, absolutely. It will. That's often likely to be the case. and we will absolutely look to run with it. So that's kind of our thinking. Yeah, so that's exactly it. So we generally want to just be mindful of where capital is going and what decisions are likely to be made, and they'll often make them around 100 period, 200 period moving averages, and on shorter time frames, and a little bit more for those that are trading kind of swing trades. They'll be probably focusing a little bit more on your sort of 50 period moving averages, because they're just a lot closer to price. Yeah, listen, my pleasure. Unfortunately, we do need to conclude the broadcast, just purely because we've got another trading session to move to. So we'll be back again tomorrow at 12:30. These are very much our trades. The euro dollar to the downside, look to get involved on a pullback. The pound dollar continuation trade to the downside. Sorry, this is let me just get the correct markets back up now. Yeah. So the context is, broadly speaking, in risk on market conditions, but we're clearly getting that dollar strength trade, filter through these markets. So they're all, even as we speak, they're all pushing lower. There's an opportunity to sell the pound dollar at the 38.19, just below this little breakout trade. And you could probably use the 38.60 as a bit of a stop loss. You'd be using stop losses up at these levels if you do get in on the breakout trade. We're already trading the pound dollar to the downside and the pound yen. And we've also got, on bigger time frames, the euro dollar to the downside, the dollar CAD to the upside, the New Zealand dollar to the downside, and the pound yen again. So listen, my pleasure, guys. Look, I'll let you guys go. We're clearly getting flush trades to the downside in these markets, so let's see how long that lasts for, and we can then reposition ourselves accordingly, I guess. Absolutely my pleasure. So look, on that note, we'll be back again tomorrow at 12:30. Hopefully we'll have some decent opportunities for you again tomorrow. So from everyone here at the live trade room, thanks so much. Take care. Give us a thumbs up if you can. Subscribe to the channel, all the usual things. And we'll speak to you soon. For everyone here, bye for now.